Um, our facilitator for today is Mr. Albert Folonshaw. So I would hand over to Mr. Albert Folonshaw, who is already on the call, to take us through this Module 1, Session 2. Good evening, Mr. Albert Folonshaw. If you can hear me, over to you, sir.
Thank you very much. Good evening. All right, so this is the Train the Trainer, Module 1, Session 2. The first session was taken by the chairman, and that's a few days ago, and I'm sure we're still very familiar with all that we went through. The purpose, again, of this training is to educate ourselves so that we can be better informed, to be able to inform others at the same time, and then have some level of confidence and understanding of the provision of the tax reform. Again, we want to have people that will be able to explain the reform, the underlying reasons for some of the decisions and suggestions and proposals which have now become law, and how we're going to go forward with implementation. Again, we want to be able to demonstrate their necessity. Why do we want the poor to pay less tax? Why should the rich pay more? We want to have that confidence, not just AI demonstrating all over the place. We want to be able to correctly inform people of the real provisions of the law. There is a lot of misinformation, So we want to correct those misinformation, be able to tell someone how much tax you should pay, be able to tell someone if you receive a gift, it's not an income per se. Okay, we'll be able to explain to one who is liable to pay tax when you receive an income, and the fact that your assets, also can give an indication of what your income is. All right, and then of course, to be able to have some consistencies around the conversation regarding the tax reform. At the end of the day, from this Module 1, which I'm taking the Session 2 today, we should be able to describe the economic and the policy logic underpinning the reform, like I said, and have a good understanding of the clear structure and the intent of the 4 laws, or the 4 reform laws. Why did we have them in those buckets? What are the reasons? What do they relate to? What do they cover? And then be able to explain the new institutional and legal architecture for implementation, particularly focus on the Nigerian Revenue Service and, of course, the Joint Revenue Board. Okay, we want to be able to identify items, that will pick down for communication, key changes. All right, there have been a lot of talk around, different versions, but the key versions remain the same. We need to be able to have that knowledge to be able to explain to the public and tax-paying public, particularly, what their obligations are and what their rights are and what step to take. What are the very minute steps that will help them, take advantage of all of the provisions? What documentation do you need to keep? All of these are, geared towards ensuring a very well implemented tax law, where there are benefits, the benefits gets to those who are eligible, where there are taxes to be paid as well. A country without tax cannot survive. There are a lot of stories. Today I was watching on the news the fight that Joshua won, the quantum of tax that he's paying out of the $91 million that he earned. At the end of the day, he's going home with only 48, having to pay tax because the event took place in US, and therefore, because of the place of event, tax is also applicable. But because Joshua is resident in the UK and is tax resident there as well, he's also liable to tax. But of course, we know that the source which is US, will take their tax first, and then the UK, which is his place of residence, will also assess him to tax. And because of the double tax, arrangement between US and the UK, he is able to take a deduction for $37 million that will be paid in US, so that the difference is just the balance that he pays in the US, in the UK, which is some level of agreement between the two countries, which is not too far from MOU. And there have been a lot of argument around whether an MOU, is ceding power and all that. I'm not going to go into those deep, very technical area, but of course, just on the surface, an MOU can also be a law, and it can also be just an MOU, which means it may not have the force of law. Okay, so of course, we've been enlightened as to how this delivery will go. We're going to have 3 live sessions. We already have 1, and a self-study, as we have been informed, and again, assessment, which is going to be scenario-based discussion, as well as quizzes and all that. So that is just a summary of an overview of what we have to do. So I'll just go straight to this session, which is the second session on the Module 1. So this is the agenda for today, which is the second session of this module. We're going to look at the tax regulation making powers. Okay, for every law, there are subsidiary legislation that give credence or activation to provisions that are already included in the law. So we're going to look at who has the power to make those regulations. After that, we'll look at, in the tax reform, in the 4 laws, which areas do we need regulation, and how is it being done? What are those specific provisions that cannot take effect until these regulations, are in place? And of course, that will focus more on the power of the Minister of Finance. Then, of course, we'll be looking at the new institutional framework, which I already mentioned, the role of the Nigerian Revenue Service, which is saddled with responsibility to account for all revenue to the government. I didn't say to the federal government because it's to the government. Part of their collections also go to the state and the local government. So we need to take note of that. And of course, the introduction of the Office of the Tax Ombudsman, which is an intermediary in the process of dispute resolution with taxpayer. And of course, the big one here is the accreditation framework for tax agents. Of course, we have several institutions, association, CITN, ICANN, ANAN, MBA, experienced persons who make claim to being tax expert. But of course, that has been the practice for over several decades. But what has been included in this law is that we want the tax authority themselves to be able to accredit who they think have the ability and the required knowledge and experience to represent and make representation to the tax authority. And then we'll dwell a little bit on the dispute resolution specific, starting with the Tax Appeal Tribunal, to the Federal High Court, to the Court of Appeal, and may end up at the Supreme Court. That is the basic agenda for this evening, and we'll take them gradually as we proceed. So, talking about regulation making powers, the provision of the NTA has made specific reference to circumstances that require the Minister of Finance, specific Section 195 empowers the Nigerian Revenue Service as well, okay? While the other provision, the tax reform, also make clarification as to the essence and the relevance of the subsidiary legislation relating to the main tax law, and where we'll need the finance minister to make regulation and the impact of those regulations. That is the first point of call. Regulation making powers included in the law. The minister has power to make regulation as specified in section 144 of the NTAA. Subsection 1 specifically states that the minister may give the relevant tax authority or its chairman such directive of a general nature or relating generally to matters of policy with regards to exercise of functions under this act or any other tax law as may be considered necessary, and relevant tax authority or its chairman shall comply with the directive or cause them to be complied with. So, which means there are provisions in the law as presently passed, which cannot take effect until a specific regulation is issued to give directive as to how the law is to be implemented. Okay, usually the argument is that the regulation is also law, but it cannot change what is already in the law, okay, being a subsidiary legislation. And because their foundation is in the existing law. But when they are made, they are more or less part of the law. And that is why we call them subsidiary legislation. So we're going to look at some of those provisions in the Nigerian Tax Act, the Nigerian Tax Administration Act, as well as even in the Joint Revenue Board Establishment Act that requires the minister to issue a regulation, or where it requires the Nigerian Tax, where it requires the Revenue Authority, particularly the Nigerian Revenue Service, to issue a regulation subject to the approval of the minister, subject to the approval of the minister. So this is also trying to educate the public that until the need is seen by the government, particularly when it comes to the surcharge, if I jump into that straight away, the surcharge on fuel, on fossil fuel, 5%, that will not be activated until a regulation is issued by the minister. All right, so that is the nature of thing we're discussing tonight, this evening, and it should give us an understanding of specifically the part of the law we are trying to gain understanding. All right, so to be specific, the above items, which I'm going to mention one after the other, are those that are already in existing law that without regulation, it cannot be activated. The first one is to determine what constitutes significant economic presence of a non-resident individual or company. What makes a significant economic presence? Is it just when you send your employee? Okay, this provision has to do with a non-resident entity. Okay, there's a provision that says that help to determine when a non-resident entity, either an individual or a company that is not resident, under what circumstances will they be liable to tax in Nigeria? Okay, and the provision is to the effect that if such a company or individual has what is called significant economic presence, so there's a need for a regulation to be issued which will define and describe specifically when a significant economic presence, is deemed to exist in Nigeria. And when such exists, it means that any income derived by a non-resident through that significant economic presence or by reason of being deemed to have a significant economic presence in Nigeria will be liable to tax in Nigeria. So Nigeria will now be the source as far as that income is concerned, which will be taxed in Nigeria and may also be liable to tax in the country of residence of the person or of the individual or company. Okay, so that is the first one. Again, there's a provision that says that makes rule prescribing the procedure of appeal at the Tax Appeal Tribunal. What is the procedure of appeal? There has to be a regulation to back that up. Can an ordinary person come before an appeal? Do you have to dress like a lawyer? Or do you have to be a senior advocate? Can the company represent itself? All of those has to be, provided for in the law. And of course, we are referring to a regulation which is subsidiary to that provision. Then, of course, we have a regulation has to be issued to be able to amend or modify VAT-exempt suppliers, all of which has to be done by the minister as well. And of course, the last one here is the one I mentioned relating to the surcharge, the 5% surcharge on fossil fuel, even though erroneously still being carried as excise duty in the NTA. It's specifically a surcharge. A regulation must be issued before that law can be triggered for implementation. Okay, and specifically speaking to the surcharge is provided in Section 161. A lot of misinformation out there says that from January 1, there's going to be a 5% surcharge on PMS. That is not true because there is no regulation that has been issued. Okay, and specifically, Chapter 7 of the NTA says that this will only be implemented if the minister issues an order published in the Gazette to that effect. No such Gazette has been issued, and therefore we don't expect the 5% surcharge to take effect from January, except an announcement or an order to that effect is issued, which will describe the modalities for the collection. Will it be at the petrol station? Will it be, we'll just go straight to Dangote? Since you are the one producing, help us add 5%, and there'll be no issues on the at the petrol station, just add the 5%, and then government will take it. You know, all of those modalities are to be contained in a regulation that should be issued to trigger the implementation of that law. But such is not in existence for now. So let's carry the communication appropriately. We used to have something in similar form before on telecom, and it was never activated before the law was repealed. And so who says this may be implemented? It may not be implemented at the end of the day if there is no need for it. I mean, policy issues are going to be the forefront, and the budget, financing the budget, monetary issues, all of those are going to be considered before such will be activated. Again, we have the suspension of the VAT and variance of VAT classification. This is in relation to the 11th schedule of the NTA, listed some items which are currently exempt from VAT, but which may become subject to VAT if the minister so desire, depending on the fiscal requirement, or by issuing, an order in a gazette for that purpose. And once it is implemented, the same minister may also suspend the implementation where it deems it necessary by issuing another order. Okay, these are all listed. If you look at, let's look at what we have in the schedule. We have petroleum products, renewable energy, equipment. They are currently, suspended, and of course, the 11th schedule of the NTA, lists these items are currently exempt, but we're saying that they can also be, if the minister's desires, based on consultation, okay, these items can become liable to VAT, but presently they are exempt. Petroleum products, renewable energy equipment, the compressed natural gas, liquefied natural gas in its liquid form, and other gaseous hydrocarbons. All of these are presently not liable to VAT. The minister can, however, through another, has the power to vary the exempt to zero rated for the purposes of VAT. And of course, we know that the impact is also very significant. If we vary the exemption from being exempt to being zero rated, it means that you are able to claim input if you have incurred input VAT in the course of dealing in this transaction. But if it is just exempt, it means that no VAT is charged on it, no return of VAT is required of them, and whoever suffers VAT on it, will bear it. Okay, now, the classification of the items are also as specified: the equipment, the component, and the infrastructure related to conversion and installation of expansion of compressed natural gas, and of course, liquefied natural petroleum gas, including conversion kits. Their exemption is very significant. Most of the power generation in Nigeria now are from gas, and their exemption, usually they pass those VAT to the GENCOs, and then of course the GENCOs pass them to MBES, who eventually pass them to the DISCOs. But if that exemption is sustained, okay, the only VAT we'll be talking about is at the DISCO level, and of course, which means it will just be a deduction since they wouldn't have suffered any input VAT in the ecosystem relating to power. All right, so that is the current position relating to VAT as far as power is concerned. Then we have the presumptive taxation, that is applicable to individuals. Yes, we want to limit it to individuals so that it is only applicable to persons who cannot accurately, ascertain or account for their income and the applicable tax. We usually make reference to the informal sector, even though we know that there are several formal sectors within the informal sector. Okay, but this is focused on presumptive taxation. And so many of the states, this is very critical for them because most of the people in the subnationals who are subject to taxation, particularly individuals and enterprises in the name of the owners, are under this categorization. And therefore, presumptive tax may just be applicable to them. And for you to implement that, a regulation has to be issued, which would define what qualifies a person to be subject to tax under the presumptive taxation as specified in Section 29. All right, what is the threshold of income that will be categorized? Can we compare that of individual and company and be able to determine what specific threshold should fall into the category of presumptive taxation? What are the exempt persons or institutions as far as presumptive taxation is concerned, particularly the artisans, the roadside hawkers, the mama put all over the place, who have no office, or maybe have no store, but just have a few minutes before the Y Brigade people will come and carry their food. Okay, do they fall within the presumptive taxation? All of those are to be contained in the regulation that is being issued or that will be issued to give effect to this specific provision. And it is very key. The states are very keen on having them as quickly as possible because that will also help in removing or letting them focus away from the nuisance taxes, that they have that they have hitherto focused on in disturbing businesses all over the place. So the hope is that with this presumptive regulation being issued, there will be so much, they will have some confidence that their revenue will increase and they will be able to forfeit some of the taxes that they have been pursuing, which generally the public frown at significantly. Of course, we also have another regulation that needs to be issued for deductibility of some expenses, particularly for oil and gas operation. Okay, the minister may allow other expenses to be deducted, for the income tax purposes, particularly for oil and gas, by publishing expenses in official gazettes. Okay, there are several expenses incurred by oil and gas companies. We have community expenses. If there is no gazette to support that, all the rule of deduction are not always going to work for petroleum company, particularly when you talk about the rent test. Are they wholly incurred, reasonably? Are they necessary, okay, or exclusive to the business? Sometimes some expenses will not fall within those categorization. And if you look at the provision of the current law, some of those criteria have also been removed, particularly necessary and reasonable. Okay, allow businesses to run their business instead of determining what is necessary and what is reasonable. So the minister may, on the basis of agitation, not necessarily agitation, when they feel it is necessary, but most times they will come through agitation and claim by oil companies, particularly for expenses that are, significant, where you have oil spillage here and there. There may be need to capture that as expenses that will be deductible. But for that to happen, the minister must give approval, okay, as may be required to the tax authority, so that they can make special rules that are necessary for those tax administration. Since, they can also help in determining the nature of form and format for tax returns. Should it be yearly? Should it be quarterly? What type of form should be used? Okay, who is responsible for filing what? Is it should everyone file if you have a joint venture or production sharing arrangement? All of those can be captured even with the regulation issued for that purpose. And then again, we talk about the Tax Appeal Tribunal, which also require regulation, because you need to be able to demarcate the coverage area. Is the tax tribunal in Lagos covering Abuja and all that? All of those has to be specified in a regulation that has to be issued by the minister. The minister can specify by that notice in the Federal Gazette the number of zones that we need to have, the matters and the places where those tribunals should exercise their jurisdiction, and the minister also has the responsibility to appoint those tax appeal commissioners. What will be the qualification of each appeal commissioners, the coordinating secretary and the secretary for each of the zones? All of those need a specific provision, which must be provided in the regulation. All right. Moving on, we talk about the new institutional framework, starting with the Nigerian Revenue Service, the Joint Revenue Board, for a start. So we're going to look at what are the composition of the Nigerian Revenue Service, and what are their functions, what duties do they carry out, have they taken over the activities of other government institutions, who, particularly the custom, the master of this world. Is there any provision in the law presently passed that says that Nigerian Revenue Service will take over their work? The answer is no. Okay, so looking at the framework, starting with the Nigerian Revenue Service, their function are very specific. Again, the reason for their restructuring, not restructuring per se, maybe the name change, is to reflect the fact that, more importantly, that the Nigerian Revenue Service or the Federal Revenue Service is not only for the federal government. I'm sure we all are familiar with what happens to revenue generated or collected by the FRS. They are shared by the three tiers of government: the federal, the state, and the local government. So it's better to just make it a service that is reflective of their function. Specifically, they assess and collect taxes that are due to the government. When I say government, it means the state, the local government, and the federal government. Okay, not the one that are under the purview of the state. I'm sure we are pretty familiar with those. They collect taxes from companies and individuals that are, resident outside Nigeria, and the FCT. In fact, we already have the FCT IRS now, and so who collects on behalf of the, it's a ministry. So FCT is a ministry, more or less. So it's still part of federal government. Then we have they administer all revenue accruing to the government, all revenue, okay? I'm sure we all know that that is with inverted commas, because yes, they have the oversight function of accounting or administering all revenue. There are some that are still, included in or that are still under some other organization. Specifically, I'm sure you know that there are taxes that are collected. I mean, custom duties still, customs still have, the obligation to collect their own custom duties. The master still collect those their taxes, but the FRS give account or have with the single window provision, they have an oversight or a view in terms of whatever is happening in those at the port particularly. Okay, they also carry out tax examination, investigation exercises. These are common thing. We're just hoping that they will be streamlined. Those activities will be streamlined so that when an investigation is carried out, there can be certainty in audit, certainty in obligation, certainty in liability. A situation where we have other government agencies who are not truly responsible for some of these activities, dwell or delve into those activities. It makes the tax system very uncertain, because I don't know what provision in the Constitution says RAMFAC should take over audit and investigation from Nigeria Revenue Service or FRS. Nothing there at all. Yes, you say they can audit revenue. I mean, it is from the people or the organizations that have been saddled with those responsibilities. If they are concerned with revenue, they should go over and audit FRS, not going to individual companies. The functions here says that it is the FRA that can carry out tax examination, investigation exercise with a view to enforcing compliance, and it should stop there. We shouldn't have EFCC. Yes, maybe if they are criminal or has to do some level of economic, financial crime related, yes, they can have a view. But as soon as they identify that this is pure tax issue, they should be handing over to FRS or to the Nigerian Revenue Service, not trying to do hiring substandard consultant to do the work of highly trained, well-experienced Nigerian Revenue Service officials. Again, to adopt measures to identify, trace, freeze, or seize proceeds derived from tax fraud or evasion in line with the provision of the relevant law. Yes, there have been questions as to what is do you tax funds generated from fraudulent activity? You don't tax, you take them over. That's what it means. Automating tax is also something that is all over the place. Automating tax administration through digital platform, data analytics, and integrated technology system. That is already going. We have the e-invoicing, okay, that is being deployed now. This is December. By now, companies with turnover above 5 billion should have started integrating to the e-invoicing platform of the Federal Revenue Service. And that is very significant because they can automatically, have access or have record of transactions as they are taking place. And they have seen the impact, last year, particularly when they deployed some technology to some hotels and some that they have used as a test run. Okay, so that cannot be overemphasized. There is a need for those technology to be deployed, makes life easy. Some who want to comply, when they don't have the platform to comply easily, it's always very difficult to release. Nobody wants to pay tax, that's the truth. All right, so but I mean, if you have technology that can take away my tax before I receive it, I'm so happy with that. And so many companies are also in that situation. Then they are to collaborate and facilitation of exchange of information with relevant national and international agencies or bodies on tax matters. So I don't understand what a lot of comments, regarding the MOU that Nigeria signed with France. In the last few years, a lot of information have been exchanged, particularly for Nigerians and Nigerian residents and Nigerian companies, that have overseas transactions. At the end of the year, because of those exchange of information, countries like Switzerland, send detailed account balances of Nigerian company that open accounts in those countries. And what the FRA does is to ask questions. We understand you have so much funds, in Switzerland or in any other country. And the question is, have they been considered in the return you file with us? Because, as a Nigerian company, you are liable to tax in Nigeria on your global income. Okay, then you need to also defend whether those balances relate to loans that you have obtained, or are they income, are they payment for services you have rendered? So without such arrangement, how do we implement the law that required a Nigerian company to be taxed in Nigeria on their global income? And there is nothing much more than that in that MOU. Exchange of information, provide information for me, I provide for you, and then we're able to generate more revenue. People are able to pay tax on their truly earned income and not on your borrowing. If you have borrowing, nobody is saying you should pay tax on it as long as you're using it to generate more revenue for your business. All right. Then, of course, FRS is required to carry out sustaining public awareness and enlightenment, collaboration to provide training, continuous education. All of those are functions of the Nigerian Revenue Service in the new provision. I will not go into their composition. I know that is, I don't know whether it is one of those things that have been criticized. I mean, in terms of the National Assembly. So those are very political. I'll move on to the Joint Revenue Service, Joint Revenue Board, which we formerly know as the Joint Tax Board, which has now been reconstituted. The head office will be in Abuja and will be headed by the chairman of the Federal Revenues of the Nigerian Revenue Service will remain the chairman, and all chairmen of all the states, Internal Revenue Service, including FCTRS, will be there. We also have some ex-official members drawn from key government agencies like the CAC, like the National Identity Management, like the Corporate Affairs Commission. All of those are members of the Joint Revenue Board. Their key function is to maintain a database. Yes, we have heard about the tax identification number. All right, the tax identification number that they're trying to unify, but that does not stop the current one you are using from being, synchronized into what they're trying to do. And the truth is that no account will be closed in January because of tax identification number. The Joint Revenue Board is collaborating with the states and with the financial institutions, such that automatically using the NIN and national identity number of each person, the tax certification number can be generated automatically or can be viewed at a portal by the bank and then just upload it and use it. So if you're already in a system, you have account with a bank and you don't have a tax certification number, they will ask, all they need to ask you is for your NIN, and with that, they will be able to, upload or go to a portal and pick your tax certification number, okay? And it is only when you are doing business that we expect that you will pay tax, not that all your the balance in your account, that's the narration that is going everywhere. Some people are even trying to incorporate so that they can move their money from their name to a company. Okay, you are running away from a zero tax or 15% or 18%, 21, 23, maximum 25, to a tax that starts from 30%, which can go up to 34 by the time you add the development levy, can increase, So it's just misinformation. I mean, if I'm giving free advice now, I will put my money in my personal name, because that is the only place where I will pay the lowest of tax, not in the name of a company. Okay, so it is the responsibility of the Joint Revenue Board to also promote uniformity and consistent tax administration across all tiers of government. Where there is dispute between authorities, they are also responsible for resolving such dispute. If you have somebody is living in Ogun State but working in Lagos, or people working in Lagos and living in Ogun State, we always have residents dispute in that manner, or people who are off in the contiguous zone in some river Rhine area. We want to find out which this batch that is on the onshore, territorial water, where is it in Ondo State or so? Those are some of the responsibilities that Joint Revenue Boards engage in resolving. If they can, if not, goes to through the legal means. They also, of course, have to conduct research and revenue analysis to support the economic development, and of course, collaborating with tax authority to detect frauds, assess systemic risk, and recommend preventive measures to the relevant tax authority. That is the Joint Revenue Board. Then we have the Office of the Tax Ombud, which I mentioned. Somebody has been engaged already. It's provided in Part 4 of the Joint Revenue Board, and is introduced for the first time in Nigeria, and it is majorly to protect the taxpayers' right and provide, as low-cost resolution mechanism and as fair as possible. They are to be headquartered in FCT with offices in 6 geopolitical zones. Okay, they have. It is the responsibility of the president to appoint through recommendation from finance, and that has been done already. Somebody has been appointed, and he will more or less set up the offices. Their key functions, I will just go through briefly. They're very straightforward. They don't have the force of law per se, which means their decision cannot be enforced as that of what we have in the Tax Appeal Tribunal. They are just advisory, more or less in nature. And so they serve as independent arbiter for complaints relating to taxes and levies, custom duties, and excise matter. They can also investigate and mediate, if there are complaints against the tax authorities and their officials, majorly. And they also help to review issues in tax administration and advise government agencies where necessary. Okay, so they are more or less the first line in the dispute resolution process as far as taxation is concerned. And they can conduct inspection at tax offices and issue directive for complaints for the purpose of resolving those issues. They also monitor arbitrary fiscal policies and report findings to National Assembly. It is hoped that they will be more available to small companies who can not afford the legal process. Even tribunal is not easy, it's not cheap as well. So this is just the starting point for every dispute, and it's not compulsory that you go through this route in resolving your dispute with the tax authority. But of course, they have limitation. There are things that they are not supposed to delve into. One, they are not supposed to interpret tax law except as they relate to admin or procedural application. They're not supposed. Okay, they are also not supposed to review matters that are subject to litigation or already in court. That will be sub judice. Okay, and of course, it is not their responsibility to determine tax liabilities or to issue tax assessment. They're just mediator, like we said again, and they are also not supposed to accommodate. They can accommodate complaints by tax official about no, that's personal grievances against their tax authority. That is not their responsibility. That is employer-employee type of dispute. It is outside the purview of the tax OMBU. And of course, they will only react to named disputes. They are not supposed to carry out research, or you ask them arbitrary or no name. You can't have a no name complaint. You must name the party involved, the tax authority, the tax office that you have dispute with, and then they can then act. Not there's one tax office around Surulere that they're always asking for, irrelevant things. You need to be able to specify what you want the tax ombuds to do. We believe that Nigeria will get used to them, and we hope that the tax authority will also listen to them and ensure that their relevance is seen in the tax process. Of course, all of those governance and accountability, required of a public office is also applicable to them. They are to maintain proper account and undergo audit within 6 months after the year end by auditors approved by the Auditor General. They are to maintain and detect fund financed by government allocation, grant, donation, and permissible revenue sources. If you look at the law, it is clearly stated that they can take donation, but they must account for everything. They are also to submit annual accounts to the Minister, President, and National Assembly, and of course, issue a quarterly report on the issues that are system related. They are to act with so much integrity. They need not be partial to the tax authority or to the taxpayer, and they must be professional in all their dealings. And of course, they can publish their findings by way of research, make recommendations that will promote, the improvement in tax administration. So, if there is any dispute, how do you do? The tax ombudsman may resolve a complaint by making a recommendation to the relevant government agency or the complainant straight away, or where the tax ombudsman finds that the revenue agency has acted beyond the scope of its authority, the matter shall or will be communicated to such revenue agency for necessary action. And that is their responsibility. And then where the complaint is such that warrant criminal proceeding against an officer of the tax authority, the ombudsman may refer such matter to the relevant tax enforcement where the authority fails to take appropriate action in respect of the allegation within a 30 days period. So they're just going to be standing and watching and ensure that, hoping that every government, authority, align with the provision of the law. Now, resolution and recommendation process is that where the relevant agency fails to implement a recommendation of the tax ombudsman without providing satisfactory reason, of course, the ombudsman shall refer such matters to either the state or the National Assembly, who has oversight function and can ensure that their recommendations are taken into consideration. The tax ombudsman may also encourage parties to explore alternative dispute resolution, methods. If the issues cannot be resolved by them, they can advise you to go to the tax appeal tribunal. And if that cannot be resolved, you can move on to the Court of Appeal, to the Federal High Court. After the tax appeal tribunal is Federal High Court, and then the Court of Appeal, and subsequently to the Supreme Court. And where complaint is lodged and the respondent fails to appear before the tax ombudsman, of course, or takes action to obstruct the performance of their function, the complaint shall be deemed to be resolved against such a party, which means you are obstructing dispensation of justice, and it will be held against you. But of course, most of their activities are going to need the tax authority to cooperate with them so that their impact can be felt. All right, the last one is the agent accreditation. This is also very a bit controversial, as a lot of people have laid claim to being the only authority or institution that can train or approve or as soon as you have their qualification, you are supposed to be allowed free, to be able to carry out tax activity. Okay, so that provision is the Nigerian Tax Act. It says no, okay, and it says that is a major change to the previous system. Now, the tax agent must be approved by the authority. The key provision under the regime are mandatory accreditation for filing returns, and that is under the NTA. No return will be treated as validly filed unless it is submitted either directly by the taxpayer or through a tax agent who has been duly accredited by the relevant tax authority. You must be accredited by the relevant tax authority. The regulatory requirement for accreditation is also stated that the Act empowers each relevant tax authority to issue detailed rules, criteria, and procedure for accrediting tax agents. These criteria may include minimum professional qualification, the experience, the threshold, the membership of a professional body, and of course, your participation in professional development. Just like we have for BRIPAN. I'm currently the president of BRIPAN. For you to carry out an insolvency activity, if you don't have a certificate issued by BRIPAN, CAC may not register such appointment. Okay, so the same thing is what is being deployed here. The fact that you are a lawyer, you are an accountant that can carry out receivership does not mean that you can just take up the assignment. If you are not experienced or you are not up to date, CAC will not register you. You don't bring evidence from BRIPAN that you have carried out your activity or you are up to date. Sorry. The same thing is what has been included in this law and is not practiced only in Nigeria. A lot of people claim to be tax experts and they're just tax agent, more or less. And so the tax authority have been empowered by this provision to accredit those they found, worthy, which means there will be a process for accreditation of those tax agents. And that mandatory attestation, is critical before you can be considered, an acceptable agent for the tax authority. Tax return filed by agents must include a formal declaration. You have to put a declaration or attestation that by the accredited agent affirming that you have exercised the required technical competence and applied the highest standard of ethics and professional conduct. The downside is the fact that companies can always file their return by themselves, whether they are accredited or not, whether they have a qualified person or not. Okay, so which means, yes, a lot of companies will find a way to circumvent this provision. But as a professional, if there is any process, you want to be the first person to take yourself through the process so that you can be accredited, and the benefits are huge. One, if you are an accredited agent and you file return for a company, the company may even escape audits. If they know that every return from this company over the period has been perfect or near perfect, it is possible that such a company may be excluded from a regular routine audit, except there is anything that trigger investigation. And we're hopeful that with the new revenue service, proper procedure will be followed in carrying out risk assessments. If the risk is not there, there shouldn't be any audit or investigation. But now what we have with the system is such that companies are kept in investigation over the period. I don't know what files are doing investigation. After investigation, they should move back to their proper sector so that normal audit should continue. But when you have targets and all that, people tend to hold on to file just to be able to meet their targets, even though they should have left investigation. All right, so tax agent accreditation, the primary objective of introducing the need to accredit tax agents is to preserve the sanctity of tax practice and eliminate unqualified consultants who have historically contributed to filing errors, non-compliance, and revenue leakages. There have been stories around some consultant filing the same account for 5 years, and all they are doing is to change the year, 2025, 2026, and the same figures all over the place. So it is giving the authority this provision will allow them to choose or to accredit those they have found worthy and who will continue to uphold the ethics of the profession, okay, by improving the quality and reliability of tax consulting services, strengthen taxpayers' compliance, and reduce disputes, protect taxpayers from fraudulent or incompetent advisors, and enhance the integrity, efficiency of the tax administration system. This is very critical. And we believe that if this can be implemented, a lot of people will find a way to improve their knowledge. And then, of course, it will also enhance their marketability and respect for tax consultants. And finally, is the dispute resolution reform vis-a-vis the strengthened tax appeal tribunal. The tax appeal tribunal, which is the first, more or less, the legal process in any tax-related appeal. Okay, was originally established in 2007 via the FRS Establishment Act, and the TAC has been the forum of first instance for the resolution of tax dispute between taxpayers and the tax authority. There have been arguments as to why should appeal from TAT go to Federal High Court and not to Court of Appeal. But of course, the law is very clear, says that even though it says that the ruling of the Tax Appeal Tribunal will be taken as that of the ruling of Federal High Court. But of course, subsequent appeals still go through the Federal High Court because it's a quasi-court, okay, and not a full-fledged court of first instance. Okay, so key procedural rules in going through the TAT. First, you have the right of appeal. Appeal may be brought against a disputed assessment or a demand notice or an adverse decision issued by the tax authority. And in fact, to be able to strengthen our tax law, taxpayers will have the boldness to engage the tax authority on at the Court of Appeal. Okay, and yes, there are some of those Court of Appeal, TAT, Tax Appeal Tribunal, where you have professionals presiding, seasoned lawyers and accountants, and it helps to strengthen the tax law. The timeline for filing, if you have any dispute, is within 30 days of receiving the assessment or demand notice. And the tribunal may grant an extension where they think the appellant shows good cause for such extension. Now, the tax appeal by the tax authority also have the right, to file an appeal where a taxpayer fails to comply with the tax obligation. Such appeal must be filed in the zone where the taxpayers reside. We have tax appeal, in different zones of the country. I think they are in the 5 geopolitical zones, or more than that, 7. Okay, so out of tribunal settlement, sometimes after you have been to the tribunal, it is possible to still settle. The tribunal may promote settlement, particularly where the issues are not too technical, has to do with pedestrian issue of documentation, argument as to is substantiated, not substantiated, or is necessary and not reasonable, and all that. So in such situation, the tribunal will always want the tax authority, the taxpayer and the tax authority to settle out of court. If settlement effort fails, the tribunal will proceed with the formal adjudication, which is the process. Then again, the public hearing takes place. That is, all appeals before TAT are heard in public. You can always go and witness and also sometimes when people go to witness such a hearing, you get educated. I used to go to federal high courts to listen to rulings, okay, and to hear how the judges go around issuing their ruling. You hear about the ratio and the obiter, and the obiter helps you to be able to advise your client, particularly if this has been that, it will have been this. All of those are always very key when you are listening to rulings, and they help you to be more educated and know what the court will do in certain circumstances if situation. Okay, and sometimes the if situations are what you use in advising your clients as a tax expert. So those hearings take place in public, and the tribunal decision are to be recorded in writing by the chairman. Let's hope they no longer do writing. I mean, a lot of courts are deploying technology. So, and a certified true copy of such decision is to be supplied to the appellant or to the tax authority by the tribunal secretary within 7 days of request for the decision. Okay, and then of course, usually for tax appeal tribunal, the burden of proof is the responsibility of the appellant to prove to the tribunal that the assessment is excessive. Usually, we just use the word loosely. My assessment is excessive. You need to prove why the assessment is what? Is excessive. In the case of taxpayer, or that the assessment is due for payment and is unpaid in the case of the tax authority. So the onus of proof is on who appeals. One point to just make on the tax appeal tribunal, the question has always been, should it adhere to the rule of evidence or not? And the usual argument is that, I mean, TAT is not really a court of a court per se. It's a quasi court, even though the ruling are enforced as a ruling of a court. But the rule of evidence need not. I don't know how it ended, because I know there was that argument, in the course of the reform lawmaking. Some believe that the rule of evidence should be adhered to. Something that, I mean, when you are talking about evidence, it means clearly adhering to all the strict conditionalities of a proper court, and that will not make tax appeal tribunal attractive. Okay. All right. So some question now. We've been on for how long? Maybe 70 minutes or so, or 50. Chairman, are you still on?
Yes, sir. Thank you very much for taking us through the session. Very, very useful. I think what we'll do is to try and allow a few participants to ask questions. And then I'll see if there are questions that have been compiled from the Q&A room. In the meantime, we would go through and select randomly, ensuring that we have inclusiveness, men, women, people from South, people from North. So that's the approach. So the first person I want to invite to speak is Basi Etim.
Good evening, sir.
Good evening.
Good evening.
Yeah, I'm grateful to be part of this wonderful discussion. And thank you so much for this opportunity. My question, my name is Basin Tekim. My question goes as, at a private school, that was registered as a business name, what type of taxes do such school is liable to?
All right. Thank you very much. Yes, please, sir. Please go ahead. Yes.
Okay. So as a private school registered as a business name, which means
yes, sir.
It's not a limited company, it's not registered and it's not limited by guarantee, right? So it means that it's just a business owned by the business owner. So whatever profit they make will be taxed in the name of the business of the owner. All right, so which is personal income tax of the person that owns the private school. Personal income tax. Of course, there are exemptions for VAT for educational institution. Some of their fees, their school fees and all that are not liable to VAT. If you have staff that are working for the private school as an institution with a business name, you are also eligible to operate the pay as you earn. So for your employees, you will be liable to deduct pay as you earn from their salary. Okay, depending on what salary they receive, you put it on the graduated tax table. After making deduction, if they pay their pension or making any other allowable contribution, whatever is left, which is the taxable income, will be placed on the graduated tax table. And then you are supposed to make a deduction every month from those salaries and remit to the state where the staff is resident, okay, on a monthly basis within 10 days of the end of each month. So December deduction now, you must remit before 10th or not later than 10th of January. That's all. And then as the owner of the business, you know, you run a business in your personal name, you must file return no later than 3 months after the end of the year. Okay, so which means you file return to say that I'm the owner of this business. This is the total school fees that I've collected. These are the other books I've sold. These are my expenses that I've incurred in doing this business. All right, and I also contribute to my own pension, hoping that, so you can also get deduction for your pension contribution. And then whatever is left, you know, you pay the personal income tax as the school owner that is running as a business name, just like any other enterprise. If you want to be treated otherwise, then the school need to be incorporated as, if you just incorporate as a limited liability company, you will still pay corporate tax like any other company. But if it's a company that is limited by guarantee, which means the owners are not, the trustees or the owners are not supposed to share the income or spend the profit of the enterprise of the company, cannot be an enterprise, then the profit of such a company or a school will not be liable to tax, except whatever the owner takes as his own salary as well. I hope that helps.
All right, thank you very much, sir. Next is Folashade Kumapai.
Thank you very much for the opportunity. Earlier, when our Mr. Folonsho was speaking about tax for roadside people, because a lot of times I have engagements with them, I relate with them, and they are concerned that how are we going to be paying tax? How is it going to be done? I hope these people, because there was a time I went to Oshodi market and I was asking the woman selling ashoke that how do you pay tax? She was just explaining that in one day I pay at least 6 to 7 people at different times. And I said, wow, that's a whole lot compared to, and even the store is quite expensive. So I was wondering that I hope that they would also get something that they will know that I'm not supposed to be paying these people when they come to my shop and like that. So when the first session came up, talking about the presumption tax, kind of. So I was wondering that I hope this will come into reality, and I just want to have more knowledge about that. Thank you.
Thank you very much. You already have knowledge of tax from what you are saying now. I mean, for somebody that is in Oshodi, just having a store and selling materials and all that. Yes, again, you are operating in your personal name, or maybe if you have an enterprise that is registered, let's even say you're not registered, okay? Whatever tax that is due will still be in your personal name. And the advice is that records be kept depending on the quantum of transaction that you are carrying out. If you are one that is not really keeping any record, maybe you just do daily buying and selling, and then so usually the presumptive tax issue can also come up because depending on how large the transaction is again. But if it is just below a particular threshold, you probably will not have to pay any tax except if there is an engagement by the authority with the association, and then a specific levy is agreed. I know that also happens particularly for very small traders that are unable to keep record, and the transactions are not that significant. Maybe a specific levy is always agreed with the association, who also help government to collect such levies. And I think that is why that is also possible even still under this new law. And there are exemptions, though, even for presumptive tax, like I mentioned, if the transaction is below a particular threshold, as we will see when the presumptive tax regulation is issued. Otherwise, then there will be engagement with the association. Chairman.
Thank you very much, sir. So the next person that would allow to speak is Muhammad Mustafa.
All right, good evening, everyone, and thank you for the opportunity. So, my question is going to boil around the role and function of the NRS and the Joint Tax Board. I know you explained the role both are going to play, but I want some clarity on their function and how they are going to work, because I believe they are supposed to work in unison, such that the whole overall objective of the tax reform is going to be aligned to achieve the set objective. So I just want some kind of clarity on that, sir.
Okay, I think it was very straightforward, at least for each of them. The Nigerian Revenue Service is not too different from the FRS we have today, Nigerian Revenue Service. And I mentioned the reason for the naming, more or less, to reflect the national nature of their responsibility and not to just the federal government. All right, so which means they are responsible for accounting and for assessing and collecting taxes, due to the government. Okay, government as in federal, state, and local government. But of course, they are not the one collecting taxes directly on behalf of state. They are collecting from companies. And when they collect from companies, more or less, they are shared among the 3 tiers of government. So that their responsibility remain. They carry out audit, they give information, they deploy technology strictly to know how companies pay their taxes and levies and duties to the federation, more or less. Again, they also have oversight. I mean, they have the responsibility to collect taxes that are due from non-resident individuals. of course, non-resident companies that earn income from Nigeria too. It is the responsibility of the Nigerian Revenue Service to collect. I also pointed out the fact that they have not extended their catchment to cover custom and some of the other levies from the port. Those are still under the existing organization. I mean, custom, NIMASA, and then even Nigerian Port Authority. While the Joint Revenue Board is the board that oversees the overall administration in Nigeria, and that is why the composition comprised of the Nigerian Revenue Service and the chairman of each state. Remember, each state have their own responsibility under their own state internal revenue service to collect taxes from individuals that are resident within their state. And those collections go straight to the state for their own utilization, apart from what they share from the collections by the Nigerian Revenue Service. The state have their own internal revenue service who has responsibility to collect taxes from every individual that are resident in their own state, so that we don't confuse the role of NRS. Some people have said that NRS is now responsible for collecting state taxes. No, what we're saying is that taxes collected and revenue collected by NRS are shared. That's step one. The second bucket is the fact that each state also collect taxes, stamp duties, capital gain from individuals that are within each state, who they don't have to share with anybody. They just appropriate it. And sometimes each local government is also supposed to collect their own taxes to the local government revenue committee. But sometimes we also have seen in some states that the state have taken responsibility to collect some of the taxes that are due to the state because of the administrative power, and take their own collection fee before returning the balance to the local government. I don't know whether that is being done in practice, but that is what it should be. I hope that is clear.
All right, thank you, sir. So we will take some questions from the Q&A and chat box. And the first one, there are two in one from Bukola Abdul. If there's a conflict between the treatment of an income per the tax laws and double tax agreements, which one takes precedence? That's the first question. The second one is, if I understand this regulation making power, does it mean that even for a state revenue board, they need the authority of the minister to make any regulation for their states?
Okay. I can address those two quickly, Abi.
Yes, please go ahead, sir.
Okay, so double tax agreement is agreement between two parties, particularly, I mean, two states. When we say states in double taxation parlance, we are referring to two countries. All right, so it is an agreement. And so where the agreement, before you go into a double tax agreement, the National Assembly must approve it. So which means whatever is agreed is also passed into law, more or less. And therefore, when they're making law, in certain circumstances, the double taxation take precedence over the domestic law sometimes, particularly where there is double tax agreement, which we call tax treaty. Okay, and there are also some circumstances where they make exclusion. Okay, which means except for in the case of it may not take precedence. All of those are contained in those nature of agreements. So there are exemptions. There are where they have supremacy. Okay, and then there are sometimes where they're subject to local law. Sometimes. All right. The second question.
So the second question is on the regulation making powers of the minister.
Okay, regulation, yes.
Yes.
So the minister will only make regulation for taxes that are payable to the federal government. Okay, except the one that is of general application. For example, on VAT, who collects VAT? The federal government collects the VAT on behalf of all the states, and they are distributed back to the state. Okay, they are distributed among the 3 tiers of government, more or less, and we know the small percentage that goes to the state. So those regulations are still being made by the minister. But for taxes that are specific to each state, for example, if they issue a law on tax harmonization, for example, all those kiosk tax, if they harmonize them and then a regulation is required, it will be issued by the Commissioner of Finance of the state. The federal will not have oversight or responsibility for issuing such a regulation. So it depends on the type of tax, okay? And we have mentioned situation where regulation is required, and you can see that most of them are applicable to, for example, if you take the presumptive tax, okay, this will also have general application, but each state can still modify, because the National Assembly was very careful not to usurp the responsibility of the state, lawmaking responsibility of the state. So it will be a guide for general application, but each state can still modify their own guideline, or regulation in that light. And that is why some states have gone far in terms of deploying technology. Lagos State having their e-tax system, some states have not have. So they are based on the general provision on running a state internal revenue service, but each state have now issued special regulation as to how they want to operate. I don't know whether that's
All right, thank you, sir. So we'll take maybe about 3 more, and then we'll take the scenario analysis. If we still have more time after that, then we can come back and take a few more questions. Shinonso says, please expatiate on the allegation that the bill passed by the Senate is different from that in circulation. So for this one, to limit misunderstanding of whatever we say, I recommend that you go to the committee's social media account, Fiscal Reforms NG. You will see the interview I granted to Channels TV this morning, where I've tried to explain the context. So please do visit and watch the video to have better understanding. Martin, okay, Kabiru is asking if we'll provide the recording for this session. Yes, we'll provide. Someone also asked whether the one for the first session, I think many people missed the first session we had. So we'll make the recording available in the folder. We'll share the link to the folder again for those who don't have it yet. In that folder, you'll find information that you need, including self-study materials, as well as the link there's a session tomorrow, same time, 5 to 7. So you find the link to register for the session tomorrow also in the folder. We'll try and also send emails and SMS, but if you're already here, it's better for you to just register as soon as we're done with today's class. The next question is from Farouk Abdullahi, who says, given that numerous regulations are required to be issued pursuant to the new tax laws, would this affect the proposed commencement date of 1st January 2026?
Okay, I can address that.
Yes, sir.
So we have listed the specific areas that requires regulation. And they are very limited, very few areas. Okay, so which means, as far as those ones are concerned, the regulations are required for them to be activated or to give effect to those provisions. And so for some, if there are no regulations, it means that they cannot come into effect. And if you look at the law, the way it is, is a massive wholesale reform. And only few, very few, I'm just trying to see whether I can get to those areas that require regulation. Oh, okay. So you can see that, yeah, these are, am I right? Yeah, these are just the few areas that you need regulations to activate. For example, even though there are provisions, there are some definition in the existing law for what constitutes significant economic presence, just to give more clarity. That's why regulation is required. Okay, the Tax Appeal Tribunal already have existing provision in the law. This is just to streamline it more or less, as well as modify the tax VAT exempt supply, as well as specifically to regulate the administration of surcharge. Okay, without the regulation, the surcharge cannot come into effect because nobody knows how that will be applied. So, in summary, without this regulation, it has nothing to do with most of the 98% of the provision from coming into effect. All right.
All right. Thank you, sir. So essentially, the effective date is not impacted by regulations
No.
unless there are provisions that cannot be activated without a regulation. So thank you for that. Next is Jimo Akadiri. What informed the significant discretionary power that the minister has under the new law? That's part one of the question. With the significant power given to the minister and with the fact that the subsidiary regulation may not be ready by January 1st, is there any timeline that the minister is working with? Okay, I think you can answer the first one. The second one, we know that the minister is working on finalizing some of these regulations and we are supporting them. You can answer the first one on what informed the significant discretionary power given to the minister.
Okay, so you know that in lawmaking, everything cannot be spelled out in the law. Okay, and so that is why the lawmakers have given the power to the minister instead of to the tax authority. The tax authority will be influenced by their desire to generate more revenue, meet targets, and all other things. But for fiscal policy and purposes and for general application, the minister, has been given that power so that it will be based on genuine reasons. They will look at what the economy desire. For example, if you leave it to the tax authority, I'm sure they will be happy to start collecting 5% surcharge on fuel from 1st of January. But you know what that means to the generality of Nigeria, to inflation, to purchasing power, to school fee that people are going to be paying. So all of those will be considered by government, represented by the finance minister, before deciding on whether to activate that provision that will trigger the collection of a specific surcharge or exemption, as the case may be. So I'm sure you will understand. Even where the power has been given to the authority, it still maintained that it must be with the approval of the minister. And when you say minister, it's also the president, because he has to listen to the yearnings of Nigerians. He has political reasons, economic reasons, monetary issues that has to be considered before any provision is activated. I hope that helps.
Yes, indeed. So Bukola has another interesting question, which is it safe to say that until the presumptive tax regulations are written and approved by the minister, collection of tax from the informal sector, as explained during the presentation, is prohibited, and the State Internal Revenue Board can't collect taxes from these people? What recourse do these people have if State Revenue Board officials send them an assessment?
Okay. So, when you talk about presumptive tax, it means that the tax authority have no clear understanding of the sources of income accruing to the person. The person have no record proper records of their revenue and expenses. The tax authority are unable to place, whether these people are earning income or not. And so those controversies are there. So presumptive tax is more or less like a best of judgment assessment. And there has to be a procedure for determining who falls under that presumptive tax. What is the threshold for determining whether you fall under it? Okay, how will you be assessed? Will you be assessed like any other company? So without those regulations and provisions, it is just a bit difficult to activate. It will be taking laws into their hands without the requisite subsidiary legislation. So if you receive such an assessment, yes, you can object. There is always the objection provision in the law. You object and reject whatever the tax authority have sent to you, particularly for such presumptive tax. The tax ombud is in place now. You can engage them. I mean, it hasn't gotten to court level first. We are saying that, Oga, the law that is supposed to assess me, okay, since I don't even know, even me myself, I cannot explain whether I have income or not. So I don't know what rule you are using. I think it's the right thing to do. You can engage with the tax ombud, and if your objection is not being taken seriously. Thank you.
Okay, the presumptive tax regulation has already been drafted, so it's being finalized. If you want to take the approach of, there's no presumptive tax regulation and you therefore do not want to pay, you should also be prepared to disclose your actual income and pay based on the self-assessment rules. So, but I think at the end of the day, the regulation will be out, soon. Aderemi Fagbile has a number of questions, and some of them quite interesting. So the first one is 50 or 100 million naira as threshold for small companies. Confusion needs to be clarified. You can go ahead, sir.
Okay, so I'm sure we are familiar with the process of making this law. And what we hear was that the National Assembly, in their wisdom, says that 100 million should be the threshold, 100 million naira or an asset of 250 million, the threshold for small company. And in the course of issuing the Gazette, okay, either the first or second Gazette, as the case may be, there was misplacement. In fact, it was initially captured as 50 million instead of 100. And then in the course of correcting that error, it was further, the error was also made in capturing it as 50 in the, I think it's in the NTA or NTAA, and then 100 in the NTA. Okay, 100 in the NTA, yes. Okay, so that is the one that more or less speak to administration. Okay, and usually where there are disputes like this or lacuna in this nature relating to tax, it is always resolved in favor of the taxpayer. And so the taxpayer here will rather want a higher threshold so that they will be within the small company threshold where they will not be liable to any tax. And so if you take it to any court of competent jurisdiction, definitely the 100 million will hold. And I think it's as straightforward as that.
All right, thank you, sir. So the second question that Aderemi Fagbile has, I will address that. And the question is, we the trainers, what goodies do you have for us? We offer free services. So we have no goodies for you. And this training that we are providing, we are not charging you for it. If you were going to pay for this training, it would be hundreds of thousands of naira. We're not charging you for it. So the idea is to empower you with more knowledge, give you access to credible information. And with that empowerment, you can go ahead and do training and charge people. You can help them, do the transition for the organization and earn a lot of money. We only just ask you that if you receive this training for free, try and arrange one training. It can be on your WhatsApp group, it can be classmates, it can be whatever group. Just educate the other people. We're not asking for too much, but we're also not giving you anything. The third one is, what's the committee doing as per accountability and responsibility, spending of the tax income being received? Yes, that's part of the work of the committee. We actually have developed a national fiscal policy framework that deals with how governments spend our money, how they deal with borrowing, and the accountability for it, including proposals to amend the constitution to make this accountability and transparency stronger and a requirement for governance. But we can't go into all of that today because of we need to focus on the topic for today. The last point that Aderemi made is, should Nigerians panic or be relaxed as the coming of the at the coming of the review tax laws? You can answer that, sir.
All right, thank you very much. Whether Nigeria should panic or relax, for me, is relaxation all the way. There's nothing in this law to panic at all. One, as an individual, earning up to 20 million a year, under the personal income tax, under the Nigerian Tax Act relating to individual, you are paying lower tax. Your tax is definitely on the reduction. It is only when you earn above 20 million a year that your tax may be on the increase. That's one. Two, if you are a minimum wage earner, you pay zero tax. Three, if you are a small company with turnover of not more than 100 million, you pay zero tax, or your asset is below 250 million, you pay zero tax. Four, if your items that you have usually been consuming used to be exempt, most of them are now zero rated, which means you are eligible to claim inputs, the input that you incur. Five, if you are a small person that invests in shares, even in the capital market, as long as you invest what you are selling, you don't have to pay capital gains tax, or you don't have to pay income tax on your gain. Or if your proceed is not more than 150 million, you still pay zero tax on your gain. So many of the provisions are positive for taxpayer, and I don't see any reason why anyone should panic. One, the fact that you have to have your tax identification number does not mean that the tax authority will just raise assessment on your bank account. No, nobody does that. Okay, so if you have enough information to be able to defend the transaction in your account, yes, nobody will tax it. If it is borrowing, it's not taxable. If it is a gift, it's not taxable. But that does not mean that you should be allowing people to use your account to transfer money for family members and all that recklessly. If they are still basic transfer, you can still explain. So I don't see any reason why anyone should panic.
Okay, thank you very much. We'll take two more. One I'll answer, the other one I'll ask you to answer it. And I think just to add to what Mr. Albert Folonsho has said, all the things that they have used to create this fear in the mind of people, tax ID, they will debit your account, stuff around, gift and this and that. The reality is that when people are saying no to a reform, they're actually saying yes to the status quo. Under the status quo, this tax ID is there in the law. Everything that people are afraid of, they are in these current tax laws in a worse form. In fact, the one that the new tax law has a higher threshold for banks to report. Under the current one, they can ask you to, in fact, you must report every new customer, whether it's even one. So there's more reporting and all of that. So why don't we just move forward as a people under a system that is more taxpayer friendly, protect low-income earners, protect small businesses, bring down the cost of basic things like food, health, and education. So anybody who is sincere with Nigeria and loves the country would be excited and embrace this reform once they understand it, which is why we are trying to do more explaining to people so they can understand it. Johnson Olugbenga says, for an individual that is also that also has a business he does. The person use his personal account for business. I'll say, if you can keep proper record, you can use your personal account for business. If you are not sure that your record keeping is reliable, separate the account so you don't have difficulty explaining the way you mix up personal and business spending. Ibukun Emmanuel, this one, sir, you answer for us.
Okay.
Says, thank you so much for the exposition. I'm curious to know, shouldn't deliberation, consultation, and meeting be held extensively over agitation and tax-related matter by all stakeholders, inclusive World Tax Authority, before the minister gives his final approval and order? I'm asking so it doesn't seem like the minister just give order and regulation as he or she deems fit.
Okay, thank you so very much. I assume you are referring to the regulation and not the lawmaking itself. Because if it has to do with the lawmaking itself, all of those have taken place. One, the bill is put together by anybody, including government. So this is the government bill. And because of putting the bill together, consultation were made. And then, of course, when it gets to the National Assembly, before the law is passed, they do public hearing, make engagement with a lot of interested parties and concerned persons. And at the end of the day, each of the houses pass the law the way they see it. And then, of course, after passing the law the way they see it, they also sit together as two houses to harmonize and agree on a position. If it is the House own all of them prefer, they will pick the House. If it is the Senate own they prefer for any of the provision, they pick the Senate. At the end of the day, we'll have a harmonized bill, which is forwarded to the president for assent, and it becomes law. And then all of these provisions that require regulation have been carefully have been part of the law, and they pass through all these processes. The regulation is just to give effect to the law, to say that this law of collecting 5 naira, this is what you do before you collect it. The regulation cannot increase the 5 naira to 10 naira ordinarily. Okay, it is to give effect to law. And so it is not something that requires public engagement. It's like trying to call the public to come and tell government how to implement the surcharge. Surcharge is zero. You just go to petrol station, collect 5%. It's already there in the law. You don't need, if you don't want it, then it will not be in the law. And so government is just looking at the right time or the right circumstance, or whether it's even required for any exigency for them to activate any of this law. And that is why they are there, for the minister to sense the environment, look at the possibility of impact it will have on individual companies and society before activating those provisions. So it's not something that is more like a lawmaking per se. It is like an administrative process, in my view.
All right, thank you very much, sir. I think in addition to that as well, the law also recognizes instances where the collaboration with subnational may be necessary, like the presumptive tax. And it says that the minister will issue that regulation on the advice of the Joint Revenue Board. So Mr. Albert is right. If something is just to activate a provision of the law, you don't need to be consulting. But if something influences or impacts on the powers in a way of the other levels of government, you will notice in the new tax law, it will say on the advice or based on consultation and all of that. So those things are well catered for. So if you can just scroll towards the end of the slide so we can take the scenario. We only have about 7 minutes left. Okay, so we have 2 scenarios. For those who missed our first class, the QR code you see to the left, you need to scan that and keep it. That will give you access to the folder where you find materials for the first class. You find the material for today after today's class. We would edit the recording to cut out areas that are not clear or where people are silent and stuff like that, and also put them there. The self-study materials would also be there. The link for tomorrow's session would also be there. So please scan the QR code and keep it handy. So the two scenarios we have is number one. So I'll read the scenarios, and then if you want to give us your thoughts, you raise up your hands electronically, and then we'll recognize one or two people. Number one, how does the tax ombud change the power balance between taxpayers and tax authorities? Any thoughts from the participants? So I'll call on Adeshola Oni.
Good evening, sir. Excuse
Good
me.
evening.
Yeah, thank you for this thoughtful session. So in my own little opinion, I would say that the tax ombud is going to change power balance between taxpayer and tax authorities. Excuse me, please. Going
No
to
problem.
change because of the independent intermediary. You know, unlike when you already know who is going to judge you, what maybe the person can be buying or whatever. But now you know that the person that is going to give the let me say advice, because it's not a judgment now. They are not going to pass a judgment. It's just like being an intermediary between you and advising the both party and finding a way out. So you already know that the third party does not have any pre-knowledge of what is coming or who is coming, who is going to affect. So it's not that maybe they're going to take a side of one person against another. So it's going to give both the taxpayer and the tax authority a mindset of this person is being independent and is not bought. It's not that maybe they've paid or they've bought him for his idea and his opinion. So that's my own take.
Yeah, I like that analysis. It's almost like, the taxpayer is a little boy, a little girl, and then needs to deal with the tax authority that it's a mature adult, maybe even a boxer. So the power balance is against the taxpayer. So the ombud has now been introduced to be the taxpayer's friend. So just imagine that little boy or little girl now has Anthony Joshua saying, yeah, I'm your uncle, let's go together when you are going out. It changes the power balance. That's what the ombud is coming to do. Because of our time, I'll just move on to the second one, and then I'll ask Mr. Albert Folonsho to share his perspective, and then we'll close. So the next person I'll recognize will be Aziz Owueye.
Good evening, sir.
Yes, good evening, Aziz.
Good evening. Can you hear me, sir?
Yes, go ahead, please.
Okay, sir. All right. Okay. So why I think the institutional reform matters. Okay. So why I think the institutional reform matters is that we have to also look at it from the reasons why we have institutions. Institutions are there to determine whether we are having a theoretical discussion or a practical discussion, a theoretical discussion, practical discussion. And why these institutions, why we need them is, one, they help for compliance. That is, institutions help people to comply with the systems that they trust. Two, it's also going to help, if we have strong institutions also, they would help us to block the revenue loopholes, the leakages, the corruption, poor audits, and that's why we need them. Then also, the third one is also legitimacy. If we have taxpayers that believe in the system, avoidance will become an issue of the past, and that is why we need to strengthen these institutions. And I think that's just my own take, sir.
Excellent contribution. Thanks a lot, Aziz, for that. Mr. Albert Folonsho, over to you. Your thoughts on the two scenarios.
So thank you so much for very thoughtful contribution from the audience. And I think they're just on point. The tax ombud is not here as a burden, because some people have said that, tax ombud again. So they have increased the dispute resolution step. You now have to spend money. No, you don't have to spend money. The tax ombud is fully funded by government. Okay, it's an institution of government. and they are there to more or less mediate on behalf of the taxpayer, majorly on behalf of the taxpayer. And it is majorly focused on particularly those small taxpayers who probably does not have the ability and even the knowledge of having to approach a standard court. They can even recommend to such taxpayer how to proceed if the mediation by the Ombud is unsuccessful. So definitely, when you talk about power balance, yes, it's not that, yeah, we have said that it doesn't have the force of law per se, but they are advisory in nature, and they can also support the tax authority where the need arises if they are being, manhandled by a taxpayer. The tax ombuds aware of that will intervene just to be sure that the taxpayer is not unnecessarily being high-handed to the tax authority. So they are available to both parties, but more, and we know that more to the taxpayer. And like I said, the hope is that the tax authorities will recognize their relevance and allow them to function properly. When it comes to institutional reform, without institutional reform, tax rate can exist in isolation, more or less. And you can increase your rate to whatever you like. If there are no institution on their collection, I mean, it will just be there. We have, and that is why we see that some federal institutions are saddled with responsibility of collecting for the subnational. Okay, like the VAT, the stamp duty, the whole of stamp duty belong to the states, but they are being collected by some part of it are collectible by the federal. Okay, so that tends to show that institutions are very key to any form of reform that you want to carry out if you want any success. Otherwise, changing rate several times will not have any impact if they cannot be collected. I would like to stop there. Thank you.
Thank you very much, sir, for facilitating today's class. Very detailed, very insightful, and the participants have been very engaging. So well done to all of them. This is where we'll end the class for today. The link for the session tomorrow is going to be in the folder. The screen, you had it on the screen earlier on, so you find it there, as well as the other material. So the class for tomorrow starts at 5 p.m. So do join on time so that we can have the full advantage of our 2 hours, which usually doesn't seem to be enough because of what we need to go through. So on that note, thank you for joining us today. Congratulations to Mr. Albert Folonshaw, who I think either today or yesterday was just inaugurated as the president of BRIPAN. We wish you a successful tenure, and for participants on the call who want to add insolvency practice to what they do, you have a friend in Mr. Albert. Thank you very much. Do enjoy the rest of the evening. Yeah, you're welcome, sir. And have a pleasant rest of week ahead. Bye-bye.